We talked earlier today with Sam Zell of Equity Group Investors, and we talked to him about inflation and what the Fed should do about it.
Getting inflation back under control has to start with stopping flooding the market with capital. I mean, the degree to which, we used to talk about, legislation that amounted to adding billions to the liquidity. Now we're talking in trillions. I think that COVID was very much of a challenge, but I think we responded to COVID by doubling down and creating levels of liquidity that had to create inflation. I can't imagine that anybody who's an observer of what's going on could possibly be surprised at the inflation numbers when, in effect, you were giving everybody $300 a month for every child. You were, doing PPAs. I mean, you're doing all these different things to create staggering amounts of liquidity into the system. And I think we're starting to see the impact of that, not only in inflation, but in number of people quitting jobs, et cetera. We have to recover from doing that.
So as you suggest, it was liquidity both on the monetary side and the fiscal side, and simultaneously to some degree. So what can we do now as a practical matter? What should the Fed do right now?
I think the Fed should stop buying securities. $80 billion a month of added liquidity by it buying securities. I think it should stop buying securities. I think we need to raise interest rates. I think we probably could raise interest rates 200 basis points over a couple-year period and have little or no impact. There's a lot to be said for the fact that having extraordinarily low interest rates or free money instead of being an incentive is an incentive the other way and destroys the sense of urgency. And in a capitalistic system, we need a sense of urgency to encourage people to take risk and make decisions.